Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome to our show that's for you and about you. Those of you guys that work so hard for your money, and you want your money to start working harder for you right now. You want that freedom and cash flow and prosperity today, not 30 or 40 years from now, but right now to live that life that you love, doing what you love with those you love. But most importantly, guys, it's not just about being rich, it's about creating a rich life, because as you're blessed financially, you have the ability to create a greater impact to the lives of others. And that is the ripple effect I'm trying to create through you. So thank you for allowing me to do so. Thank you for tuning in, binging, sharing, and just making this show fantastic. By the way, if you guys haven't done so already, go to our YouTube channel, subscribe today. Go to the Money Ripples with Chris Miles page, subscribe there. And there's bonus videos, a lot of education that we put on there that you'll want to check out. So be sure to do that now.
Chris Miles was able to retire twice by the time he was 39 years old. But he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
All right, guys. So I got a special guest today, one that I've used personally. I'm a client of his, right? So he's like my mentor in this arena here. This guy's name is Keaton Patey. Now, Keaton, the thing that I love about Keaton, right, is that he's in the space of health insurance. So if you guys ever thought that it's a bunch of crap, that the Affordable Care Act is anything but affordable, especially for those of us that make at least 6 figures a year, it's even worse. We don't get any breaks, right? We don't get any subsidies. We just get ripped off. And it's anything but affordable. And for those of us that are in good health, it's even worse, because then we think we're throwing our money away, right? Well, Keaton's got the answer to that. And here's what's cool, because my own personal story, I went from having a health share type of account, right? Which they're great. You know, they're cheap. They're especially for someone who like me, who goes to the doctors once every 5+ years, and it's usually for something lame. I don't really need much, except for those big emergencies. The problem is, though, is those health share accounts, if you guys have them, they are not health insurance. They may not pay out when you need it. There's always that uncertainty. But again, I couldn't justify the cost. I couldn't figure out why would I do it versus not. Keaton is the one that brought me that answer. And here's what's crazy. In my own situation, not only did he matched the price, but it ended up being cheaper because they had to jack up the rates that same year. So I ended up saving money, getting a real insurance plan, paying less. And in fact, I've even had employees that have gone to him and they've saved more or pay the same or less than what they paid on a group plan with the company versus paying their own premiums. So excited to have Keaton on today, because I know for you guys, for many of you, this is going to be like an answer or a prayer answered, dream come true type of situation. So Keaton, welcome to our show.
Thanks for having me, Chris. Super excited. I mean, right, like we talked about briefly before we started, it's open enrollment. It's the busiest time of the year. I'm in the thick of it now, and being able to help people do exactly what you just described has not only been the reason why I continue in this field, but it just brings me a ton of fulfillment. So I appreciate you having me on and let me share some of that with you.
Absolutely. I know I probably gave you the longest intro I've ever given anybody, by the way.
No worries.
I mean, and really that's the thing. I mean, tell us kind of your background, like what led you to be doing this, and even how you found this niche within what you do with U.S. health advisors and whatnot.
Yeah, great question. So let's see, where do you start back? I come from a large family. I grew up overseas. I speak Portuguese, Spanish, German, some Chinese, and I sell health insurance. And of all those languages, health insurance can be the most complicated and the one that people find themselves most frustrated with. Mm-hmm. And so I have a background in sales. I did door-to-door. I sold telecommunication products for a while, which like DirecTV, all the satellites you see on people's houses is probably me or one of the guys I helped train that put it there. Biggest thing that I learned is I wanted to find a way to make a bigger impact. When I was selling TV door to door, I didn't even watch TV at the time. And so I'd tell people, it's like, look, you're watching this, you're already paying for it. Let's pay less for it and get you the channels you want, right?
Yeah.
And so I transitioned from that into something that not only could create a bigger impact, but something I could work and focus on with entrepreneurs. So I started looking at different health insurance companies, and there was a company in Utah, it's called Go Health, and they had me come in, they showed me how it worked, and like, yeah, so for you, a plan would be $500 a month. And I'm like, I wouldn't even buy that. Like how in the world would I tell someone you should use this product if it's not one that I would use myself? So
Right.
I started doing more research inside of the health insurance market and quickly found that health insurance is one of the largest expenses and largest monthly expenses that a small business owner has to cover, especially if he's trying to retain good employees, which is crucial in this
Yeah.
market. I think I see for hire sales signs everywhere. And so people are trying to retain those good people. And so I found US Health Advisors, and they do things a lot differently. They're a United Healthcare company.
Mhm.
So they're backed by the largest, 800-pound gorilla in the health insurance world. And what they do is they find a different way to qualify you. So instead of going off of your income, instead of going off of
Mhm.
how many people work in the space that you work in a large corporation or company, they dumb it down and say, hey, if you're healthy, you should pay less. And if you're a business owner, we can give you tax benefits and other ways to innovatively offer this inside of your company. So now you can not only get the coverage you need, but help retain employees that are vital to your business.
I mean, that's a good point too, because not only do you do individual plans, you even work with group plans. Is that correct?
Yep, I can help small groups.
And how's that look? Like, how's that compare? Like, give me an example of somebody who was using the typical
Yeah,
standard
so there's an
insurance before.
HVAC company in South Jordan,
Mhm.
and it's a mom and pop shop. It's a father, son, and a cousin and one employee. Now they're set up on a group plan, but similar to Obamacare, if you're looking for the individual market, they have lots of ways that they're going to make sure that you're paying more than someone else, because that's how they're giving people free insurance, right? So
Right.
if we back up and picture like a proverbial penny jar,
Mhm.
there's money going into that jar on Medicare, Medicaid, and our state and federal taxes.
Mhm.
But there's also money going into it for people who A, make too much money, or B, on the company side, to answer the question you just asked, for companies that have less than 50 full-time W-2 employees.
Mhm.
Because what happens is, if this company, this HVAC company in South Jordan, they were paying per person on that group policy $1,300 a month.
Mhm.
Now that's 4 times the amount that we were able to get them on a plan, but that has to be the case in Obamacare, because someone has to be putting more pennies into that proverbial penny jar than there are going out in free
Right.
insurance for people with low income, or budget breaks for health insurance in large corporations.
Yeah. And what I noticed with your plans, they almost remind me of the traditional plans that we used to have pre-Obamacare, right?
Mm-hmm.
Because like you even ask health questions, things like that. So if you have good health, you get rewarded for it. Is it the opposite true? If you have poor health, would it be better to do an Obamacare type plan where they don't
It
care?
depends. The biggest
Mhm.
thing is, like, healthy looks the same, looks different for different people, right?
Yeah.
So Chris, like, you're big into running. I can't run a marathon as quick as you run one, but I'm also not like living in the hospital. And if there's 1 or 2 medications, that's not a big deal. But if someone is unhealthy and they're looking for major intensive care, like I have a client that developed kidney failure this year.
Mm.
And if he can get a transplant between now and December 31st, we'll keep him on this plan.
Yeah.
But if he needs dialysis all through next year, there's state-sponsored plans like in Obamacare that's going to cover his dialysis more aggressively.
Mm.
And so it's just kind of the individual situation. So if he's scheduled to have a transplant, see what's today, 17th. So here in like a week and a half from now.
Mhm.
And if we can keep him on a health-based plan where he's not needing intensive weekly care to have his kidneys and blood cleaned. But if
Mhm.
he's going to need that going forward, we're just going to say, hey, the individual basis is, we're going to give you the best bang for your buck. And when you're getting hundreds of thousands of dollars a year of dialysis, we're going to structure a plan differently than, say, a health-based plan would.
Yeah, that makes sense. It's funny. I know I tagged you on Facebook recently because I had a friend who's a real estate investor that said, "Man, the healthcare plans suck." I was sharing the story about my chief marketing officer who's from Iowa. Then I found out he was from Iowa too. It was like, well, of course, Iowa is like that horrible state that likes to jack
So,
up your rates more than
so
anybody, right?
crazy.
But well, that was a guy that I think he was told to pay well over $1,000 a month. I've had clients even at $2,000 a month that they've.
Oh, so the record that I found on Obamacare was 2 weeks ago,
Uh-huh.
and he was real estate as well, a real estate investor in Missouri.
Yeah.
So for a family of 5, he was paying $3,200 a month.
Oh, God.
And why he wouldn't leave it is because he was told that his plan was grandfathered in, which means it existed before Obamacare, and that he could never get a plan like that again. So he just kept keeping it. He's had it for, almost 12 years now. And we literally saved him like $2,000 a month. Like,
wow.
And he just didn't know. And if you're working with someone, especially the person that gave him that plan, the broker will get points for how many grandfathered plans he was able to keep, right? It shows longevity inside of his book of business
type thing, right?
So the person who's telling you to keep that plan has incentive to do so. And he got on the phone. He's like, why have I not heard of this? And I'm like,
isn't that
you have an expensive relationship with your broker?
you would think that would be borderline against insurance compliance to say, hey, if there's something better, I should tell you. But because the person is being rewarded by not replacing the plan, they're not telling him, right? Which is so counterproductive, Right.
So now since Obamacare, he's required to, but because that one was grandfathered in, he could argue saying it predates that type of regulation.
Right.
So anyway, he was happy he got on the phone.
you can keep this old piece of turd because, Obama didn't touch it. Right. But yeah.
Yep.
That's great, man. And you're licensed in like 30 some odd different states, correct?
Yep. Licensed in most places. And even if I'm not licensed somewhere, there's different ways you can make sure we find innovative plans. The biggest thing is when, for all you listening that are following Chris, finding ways to fill your financial bucket, and double dipping on tax-free growth and your investments. The place where I see that most people miss out on is the holes in your bucket where that money is draining out.
Yes.
Right. So I'm like everybody else. I sell health insurance, but I still kind of cringe a little bit when I pay my health insurance premium every month. Like, where else could I put that where it could fill my bucket instead of that being an expense that's leaving my bucket? Yeah. And so the reason why I love working with the self-employed or any type of innovator is that we're going to make that necessary evil not only be as less evil as possible, but then let you focus on your gift to the world, right? Let you focus on the thing that makes you unique, that your unique value proposition that lets you fill that bucket and get to the point where you can start filling other people's buckets because of the ripples that you're making.
That's right. Now, curious, because obviously we've got a lot of people that are employees. They work as like middle managers or whatever, like in IT or pharmacies and things like that.
Sure.
What would you recommend for them? I mean, is this something that would still work for them even if they have a group plan?
Absolutely. So I insure 3 doctors at a major hospital here in Utah. It's called University of Utah Health, and they're a specialist hospital. Yeah. And you'd think that a doctor that works at a hospital gets good insurance. You'd think, not the case. So what happens with Obamacare since it came out is that an employer is legally required to contribute 50% to the employee that works there. So what happens is the employee gets a plan. He's like, oh, great for me, this is $50 a month. But when he adds his spouse and 2 kids, it turns into $900 a month. And that's because the wife and kids are paying full price as if they didn't have an employer plan there, because the employer is not required to contribute to the person of the spouse and kids of a person who's not working in their facility.
Makes sense.
So in this example of the 3 doctors that I insure, they're doctors. They are connected. They take care of their kids are healthy. And we left the doctors on the hospital plan because the hospital is contributing 50%. It's like free money. It's like having a matched IRA. But then for the family, we saved them all over $500 a month from what they were paying because their family are healthy. They don't need to be a part of a group plan. And because of that health, they now have $3,600 a year that they can then repurpose and focus on filling their bucket even more.
I love it, man. That's awesome.
And so when you tell me, Chris, like is $500 a month something you could help someone retire with earlier?
Yeah, absolutely. We can definitely work with $500 a month, right? $6,000 a year. That's money. I mean, money is money.
Well, no not only that, $6,000 this year will have a bigger impact in 5 to 10 years than the health insurance premium that didn't give you any return because you didn't use it. Yeah,
exactly. And seriously, that's $6,000 a year in 10 years. I mean, if you're investing in that and doing the kind of stuff we talk about, I mean, that would easily generate at least another $1,000, $2,000 a month, of passive income for you after those 10 years, so it's a big deal no matter how you look at it. And plus it's just money you don't want to waste anyways. Why spend more money for something that doesn't give you any more benefit? I mean, all things being equal, we want more value, But if we get the same value in both places, I want to pay less every time,
Right. Right.
That's the key. Now, obviously people are going to be asking this, and I'm going to ask you one more question after this too, but if they want to get a hold of you, right, or they want to be able to find out if this works for them, if you can help them, that kind of thing, how would they get in contact with you guys?
Yeah. So there is a link in the show notes that will have a calendar invite.
Yeah.
That's typically the best place because all the times that are available are the times that I have set aside to make sure I'm helping people. So instead of paying like phone tag or email tag back and forth, that'll be the quickest way to do that. I also have the Instagram notes. I have a phone number and email that I'll leave there as well. But for those who are ready to talk and even looking to look over their options, click on that calendar link. It'll ask you a couple of questions. And with those questions, I will call you with the answer to what we can do to help you save.
So it saves you guys not just money, but you save some time too, because you just say, all right, we can just get right to it.
Yep.
Here's the answer. That's lovely. I love it, man. So yeah, we'll definitely put that in the show notes for sure. One last question, because I know you addressed this at the beginning, but I know somebody's going to say that it has to be said again, right? It sounds too good to be true, right?
Oh, it's my favorite. It's my favorite statement.
I get that all the time with the life insurance side too, right? They're like, there's got to be a catch here, right?
Yeah.
Well, same thing for your end too, because they're like, well, why hasn't this worked? Why don't I see this with the other health insurance agents I've been working with? Right. What makes this so special versus every other insurance plan out there in the marketplace? Why can yours be cheaper?
Yeah. And so when people ask me that, I usually answer like, and for some people, it can be too good to be true. Mm-hmm. Right. And what most people then find clarity in is I say, let's think about if you owned a health insurance company. Mm-hmm. If you were the owner of a health insurance company, you were trying to find the way to give the best benefit, but still be profitable because insurance companies never lose money.
That's right.
If anyone tells you a health insurance company is trying to do a good deed in the world because they're nice, they're lying to you or trying to sell you something. So that being the case, when we're looking at from the point of view from an owner of a health insurance company, if you knew that somebody was maybe to the doctor 2 or 3 times a year, they rarely use $3,000 or more a year in health insurance costs, and they are in a place where they're looking to have something covered, but they want catastrophic coverage at any point, you could say, all right, I could insure you for less and still be profitable. And then people, well, why haven't I seen it? And I say, you've seen it in all types of insurances. Like car insurance is famous for this, right? If you have no moving violations, no DUIs, no speeding tickets, no outstanding parking tickets, what do you get?
Yeah. You get,
right? You get a lower rate and you get better benefits. And it's not because the insurance company is nice. It's because they know you are lower risk, so they can insure you for less and still make money.
Right. Because in general, right now with the whole Obamacare, what happened with that is that it put everybody in the same bucket. It's like, it's almost like that grab bag, the surprise grab bag. Like you don't know what you're going to get, or Bernie Bot's every flavor of beans. You might get that one that just tastes like crap or like earwax or whatever it is. And you're like, okay, well, I'm gambling right now. And so they have to jack up the rates just to factor in for all that risk where if they know your risk. I mean, nothing's guaranteed. They can't have a crystal ball, but to say, well, this person is generally healthy. They don't use this very often. Let's give them the best rates.
Yep. And so, I mean, to not get too political, because I tend to get political sometimes. I think we were a blessed country for trying to figure out a system to take care of our poor and take care of our old. And I think the United States has received a lot of blessings from trying to create that system. But where we fell short were for the people that are making the biggest difference. They're innovators, or they're trying to invest in great other passive income to bless other people's lives. Those people got hurt the most. And it's exactly what you said, because health insurance for all means Obamacare has to charge you the same rate as somebody who's living in the hospital for the last 6 years.
That's right.
Right. So if I'm healthy and I can run a mile in less than 7 minutes, I can lift my body weight, I can hike a mountain, super active guy, I'm actually paying the rate as if I'm living in the hospital with cancer.
Right.
And Obamacare, because they have to insure everything, they can't give you a tax break like that, which is why with plans like US Health Advisors or United Healthcare, we're not using the marketplace as a middleman. We're shopping directly to the health insurance company.
Makes perfect sense. I love it, man. So again, appreciate your time today, Keaton. I mean, it's always, this is fantastic, right? I mean, this is so good to know that there's this option out there. And I'm grateful that you and I even crossed paths. That option helped me, but it's also helped many other people too. And now we're looking to help hundreds and thousands more as well that are watching this episode. So again, I really appreciate you taking your time to be on today.
Yeah, absolutely. Appreciate you having me. For anyone listening, I'm really good at my job, and I don't say that to boast, but I've seen too many relationships where the brother-in-law is their health insurance agent, or they have a good friend, and that relationship became more expensive over time than what they could be spending, and then reallocating their money. So I'd love to work with you. I'm excited to make sure, along with Chris, when he's helping you fill that bucket, that the holes in your bucket are plugged, and we can reallocate that money to something that can continue to provide for you and make ripples in your life.
Absolutely, man. Yeah, I'll second that too. I mean, one thing I remind people all the time, especially when they bring up that same thing of, well, my brother-in-law is a financial advisor or whatever. It's like, well, who's most important to you, them or your family, your buddy or your family? Because you're taking away from one of them,
is he
right?
paying your mortgage at the end of the month?
Yeah, it's like, does your wife or your husband know that you're doing this? Because if so, like, you should just go marry go marry your advisor, go marry that health insurance agent, right? They should never, ever be the priority. You are the boss of your money. You guys have heard me say that over and over. You are the boss, you're in control, and your family should take top priority. You want to give the best for them, not what's for your buddy or for your family member. Doesn't do them any good. In fact, if anything, fire them and get them to learn and do it better. So,
right, exactly.
Anyways, guys, reach out to Keaton. Like we said, it's in the show notes there. You got the little calendar link. You can go and send him the information. He can email you and get you the answers that you guys need. Guys, make a wonderful and prosperous week. We'll see you later.
Visit us online at moneyripples.com for more resources to help you fix money leaks and get your money working harder for you now.